Here you go, guys. This is the resistance right here. We just approached right here at 29, 35, 50. We got a structure that failed over here before. We got rejected. About 26.75 points down, and we came up here and the market stalled there. It stopped there, right? It stopped there. So we're expecting this area to be a support, because if you look at this pivot point, that's the same thing it did right here. And when we reached 29.30, why? Because of this structure right here. This we could explain but what happened on this line, because if you think about it, that is a descending, that is the whole descending, from the top. Okay, that is the whole descending at the top. We came back over here. Why we got rejected here without even touching that? Well, you got a gap fill. That's his main objective, is to gap fill and then reject the support from the gap. Now over here, right here is a 61.8 retracement from the top. So every impulse wave, you got to be able to explain it according to what you see, right? That is a 618, that support. We turn right there and the market went up. So every time that you're gonna predict something in the future, make sure that it is explainable and all makes sense to you, because you're the one that's trading it. Right here, we got rejected here because of the descending. It's very, very clear. You got two tops right there, maybe even three tops. You got 1, 2, and then you connect this one, 3. Here's why. Okay. Now we went down right here. We bounced right here. This level held. Mind you, this is 31.78. This level held. Okay, we got a bull flag right here. We broke there. So on this breaking point right here, from this breaking point right here to the top of the pennant, that will be a support. Okay, that will be a support. Okay, the market is not gonna stop right at the dime. Why? Because let me tell you something. Okay, this is what's the problem about historical prices. Because the market moves, and you see this brown line right here. This is called day. Okay, so from here to here is 1 day. That's 1 day. From here to this next brown line right here, it's 1 day. So 1, 2, 3, 4, 5. We came back at 5 into the market close and begins a new day. 5. When we broke that bull flag right there, okay, that is significant. That was 6 days ago. That was 6 days ago. You don't expect that to turn at a dime. 6 days ago is more than a week. Market dynamics have already changes. That is why, you're not gonna expect that to turn on a dime. If it's within 3 days, fine. It will turn at the dime. Look at this. Within 3 days, right? Pivot point. This is very, very important. That's the reason why, pivot point, 3. Okay, that's 1 day. The next day, what did the market do? Turn on a dime, turn on a dime. This is understanding market dynamics, market content, and whether that level is expired or it has widened. Okay, it has widened because it's more than a week, guys. Come on, it's more than a week. You know, yes, that's a market confliction. It responded. Okay, and then it went back down to test the descending. You know, this descending line. You know, that is important to understand. Like, is this level still on play or not? Okay, is this level still on play? If not, you see how I widen it, and then I did my forecast. Okay, and you know, knowing that that was only 6 days already, we're approaching the 6th day. Guess what? On a bigger time frame, this might look like it turned on a dime. But this is 3178. It's a small max. Is like you're looking at the 5-minute to 7-minute tick chart. You know, what happened is we slammed there. Okay, look how this level is shading that area. It's shading that area. When it's 6 days already, you know, the market don't know whether that level is still significant to him. Okay, it doesn't matter. Okay, another example. Okay, let's see. Okay, so we got a resistance right here. Okay, of course it's gap, right? And it filled. Look, how many days is that? It's within 1 day and a quarter. So we start off the day right here. Okay, we start off the day right here, we start off the day, market cash open, right? Then we filled. And then, because it's less than 24 hours, you know, I have a rule book that's within 3 days, that's not significant anymore. I don't understand why other traders try to use the same level and they cannot explain to other students why why they using it still, and why did the market react like this, right? Why did the market react like that? It's so jagged. Okay, market went up, went back down. Guess what? It has the same characteristic of what it did right here. It whipsaw and then went back down. Of course it does, because it's after market. Look what time it is. Look what time it is. It's 4 a.m. 4 a.m., 3 a.m. Of course it does. Okay? But here's what we know, though. What's on the here and now? What's on the here and now? Right? The market turned right here on this choppy. So, this level right here moved down. The value of that level moved down. So, what's that telling you? The average of the market is going down. That's why you're getting these higher highs. Okay? That's why, the average of your support went back down. Okay? Look how it turned right here now. How because it's less than two, you got lower low. Okay? Now, the market turned right there at the time because it's recent. Okay? These guys right here are all auction level. Like, market is trying to bid it. Okay, right now this is updated. Updated for the next 3 trading days. Updated for the next 3 trading days. That's all. It's not gonna tell you where it's gonna go or whether these levels are gonna hold for the next 2 to 3 weeks or even a week. Okay? This one right here, I could tell you, if it's less than 3 days, it has a high probability that that's going to hold if we ever come back down, or it's going to fail. And if we do fail, expect a recheck. Okay? If we do fail, expect a recheck. And why did we turn right here? Right? Why did we turn right here? Okay? That is an impulse wave. That is an impulse wave from here all the way down right here. Okay, it didn't turn all the way to the diamond 618 because you don't have a structure. See, you got only one right there. Okay, this is not it. You need a price action that is moving up, check, and then go, right, and then check. Okay, that will be a stronger 618. Okay, that will be a strong. When we get back here, I'm expecting a turn. You know, that will be a stronger 618. But why did we overshoot? Because it's not this right here. It's not a strong pivot point. That's not a strong pivot point. Because look, what happened right here? It just went up. He doesn't know if it's gonna be value in the future. Okay, that's one value, but you need two, right? You need two. You always need two. So, let's go back to what we're talking about understanding the impulses of the market. Okay, we went down right here. We went up right here. Look, we turned. I don't care about the Fibonacci at this point because it doesn't have a confluence on the structure. This auction level right here would be more significant for me. Okay, I took this trade, I went short. I took this trade, I went short right here. Okay, this is very, very important. And let me tell you why. Okay, at this point, I don't know the future. This is the realistic part. I don't know the future. Okay, here's what I know. Here's what I know. Not here. Remember this? Choppy? No. This is the one I'm talking about. Right there. That's the one I'm talking about. Support. Auction level. Okay? Look. It could be off a tick or two ticks, right? But here's the thing. You got another support right here. Okay? When that thing held, look, that's not it. That's not a strong 618. I don't care what anybody says that there's professional 618. If you don't have pivot points, that's not strong 618. Okay, market went back. Double check that. Market went back. Look what happened. Market went down. Grabbed that big fat auction level. Check that 618 level. Okay, it didn't stop here. It stopped higher, right? It didn't go a tick, but it's close to it, right? It didn't go. I'm gonna click the center line of that, so we know how far did the market missed it. So I'm gonna click right here. Boom, market missed it by 0.75. I did not take this because I want a full measurement just like this. That's the one I took. I don't care about this impulse. Nah. That doesn't make me proud because it's not a high probability. This is more of a high probability to me. Why? Why do I think that that's a high probability? And why do I think that that is very that you want to treat trading as a business? If you have a level, you want him to touch it. You don't want him to trick you. Right? So when this market went up there, right? So again, we have the support right here, support, and we have already talk about this this level right here because it's significant right here. Once it blew, it made a U-turn and then check all these two levels. Okay, now when we went back right here, what did the market do? It went back and get rejected at that level. Okay, we got rejected at that level, at this area. Okay, this is crap.